Testing 1 2, testing 1 2. Just checking on the microphone and volume levels here before we get rolling. And about a minute or so here. Okay, so it sounds like you guys over there can hear me okay. Excellent. Looks like there's a few people in the YouTube chat as well. Hopefully they can hear me over there. Let's get the music under control here, and we're going to get this started for today. Let's bring that down a bit here. And we're going to get rolling. We're going to talk about Bitcoin. We'll look into the FTX stuff because I got some DMs about it, and then also some of the guys in Discord were talking about it. Let's see. Yeah. It's the topic of the day because it was approved, which there's no reason why it shouldn't be approved, to be honest. Let's go ahead and get this paused over here, and we're going to get this rolling. Hello and welcome. Excuse me, voice already going on me. Hello and welcome to Market Madness Technical Analysis Wednesdays here on Landy's Crypto Corner. This is a live stream, so if you are watching this after the fact, you can always hop in the chat for YouTube, and you can read through what everybody's talking about if there is any chatting going on. And for those of you watching this after the fact, go ahead and leave a comment if you do have any questions. We're going to be talking about a few different things today. We're going to start by taking a look at Bitcoin and breaking down the move up to the weekly and above here at $26,000. We'll take a look at the likelihood of the sustainability of this particular move. We'll also take a look at the FTX court filings. We can look at today's. They did a separate filing for each one, the way they're uploading all the docs right now. I do have their docs up here. Just went back a little bit from a few weeks ago. There was some docs that they filed, and then earlier this month there was some docs that they filed, and that's kind of what they approved today. So I was looking through that earlier. If we go to the first page, you can see this is just restructuring.ra.kroll.com. This is where they're uploading all of their documentation for people to review after filing in court. So in this case, they got the authorization to begin liquidating assets, but it's not quite a liquidation. The way that they actually word it themselves, and I'll show you, we'll go through a few of the documents. They approved basically many of the amendments that Kroll was submitting. Now, what that really means is, I'll give you the short take on it. Basically, they're going to use an approved SEC asset manager to go on the market and likely sell OTC. In fact, I don't see how they couldn't sell OTC, and I'll show you why that is, because it's well known that they're going to have to move these assets. But I'll even show you a few different things. Like, they look like they want to trade with them. So I will cover a little bit of that because they do have the authorization to trade with them. And that does mean buying options positions through CME or another options platform. They do have to be registered with the SEC, so I would assume that it's going to be CME if they're going to do options positions. So they don't want to just throw out their potential for gathering future fees. As this is a huge case, they're owed a lot of fees already. They need to cover a portion of those fees by moving likely OTC. In fact, I don't see any way that they couldn't move OTC. In their documentation, they don't call it OTC, but using a SEC authorized asset manager to then go and negotiate on their behalf. Well, if you're negotiating on their behalf, you're negotiating OTC. Otherwise, you just go and you'd sell it on an exchange. And in this case, I highly doubt that that's what they would do, according to their own documentation and what was just approved. So, yeah, it's a lot ado about nothing. The market can pretty easily absorb it on the Bitcoin side of things. And a lot of the amount that everybody's talking about, the big number, the headline number, is all illiquid garbage coins that they can't actually move. There's no liquidity. I mean, what are they going to do? Sell FTT at a loss? Like, as soon as their first sale goes through, there's going to be no market left, right? Like, there's a whole bunch of different stuff there. But let's go ahead and this is something that was already kind of discussed. I don't know if I discussed it on a live stream. I might have just discussed it in a different chat venue. Might have been like a Discord chat or something when I discussed this. I don't really remember at this point. It was a couple weeks ago. And there was only a few people in that chat. And I went over a few different things regarding different court documents and stuff like that. And I don't think that was live streamed. But if it was, you guys can let me know. Yeah, I discussed it with you guys over there. We've been discussing this all the past couple of weeks over there. Yeah. Can I be the OTC desk? Can I buy it at a discount? That's what an asset manager is going to do, is they're going to negotiate. All right. And if it is sold, it's going to be sold by that OTC desk, at a later date, and right now, they still have to prep for sale. Like, they just got stuff approved. So like, this isn't going to go through today anyway. I actually see this as a smart way to do things. And because they have to utilize the SEC, it's this document here. It's basically their exhibits that are attached to their filing on not the 7th. I'm sorry. This would be the filing on the 23rd. So there's a few different things that I will cover regarding this filing. And, this is basically describing that they are seeking authorization to approve their guidelines for the sale of these assets. And then this here is the exhibit for the people who are in support of the debtor's motion, and basically who the asset manager would be, and then how those assets are moved. And there's a few key statements in here that are relevant, that really point to this being OTC managed through the SEC, through an SEC approved asset manager. And there's a few different ways that they can go with it too. It gives them options to go CME. It gives them the options to go, and I keep saying options for a reason. You'll see in a moment. But and then this is the order that basically outlined their accounting of the. This wasn't the order. This was the filing, rather, that is outlining the accounting of their actual assets and the way that they would like to be able to handle them. So I'll go through this later, though. Let's go ahead and get into Bitcoin. Let's go ahead and take a look at where things are in relation to the move off the lows down here. So we had already talked about the trigger area to move down to our liquid zone at around 25.2 to 24.8. We have seen this play out, and let's go ahead and get that area up there. And just so we have a little bit of frame of reference for anybody that might be new watching here, we have this high side structure. So basically these two highs right here that are holding price up on the past two major lows. Now, is this a major low yet? Not quite. It could get there though. So that would be the golden box with the blue horizontals here. And the white and yellow lines are our volume-based swing fail and continuation areas. So in this case, we saw the move up pretty clear on what was going on there. And I did share this already, but we do want to break it down. Let's go ahead and actually get rid of the zone here and go from there. All right, so off the lows here, we had marked up this chart to kind of point out the big volume candles on the way down that will act as resistance on the way back up. And we have here the actual high volume lows. So there was this high volume low up here. This is the highest volume candle on the way down to the low here that we have marked at around 24,950. And this was the highest volume candle. Second highest volume candle on a close, which is in yellow, was this guy right here with its wick right here. We marked that wick, and then we marked the swing fail after this particular swing down, and then closed back in after some prodding from you guys here. So what ended up happening, and what was more likely to happen is, if we saw Bitcoin close below this higher volume candle low here, then we're going to move down. Well, we saw a wick down, close back in. We saw a wick down again. No closures below this wick low or this wick low here at 24,950. We did see a new wick low put in around 24,900 here on spot price. And we saw that the highest volume candle of the move down was holding price down. It consolidated sideways. And then you can see these handy dandy arrows here. We had a candle close breakout and a close above this area at 25,222. We then had a prior low reclaim. This was the prior low of this particular move down here before the new low. So we had a prior low reclaim, and then it headed right back up and hit this weekly area, which is already a marked area for us over here. It is a nice high volume area on the way down as well. So higher volume on the original lows here, tried to bounce, found new lows, found even higher volume. This was the prior low reclaim right here. So this area up here just happens to be around $26,000. That was in yesterday's price action. That is the weekly right there. So when we look here, we can see that this weekly at 25,922, and the weekly technically is coming in a little bit lower than that. It's 25,937, so still basically around 26K. We can see now that price has reclaimed this weekly area. It's come back down and retested it, even dipped a little bit below it, grabbed some liquidity, found support on it again around that 25,850 area, and then it's moved up to the highs here. It even popped up, I believe, around that 26.6 area, yeah, 26,560 or so, and then we saw another drive to 26.4, which just happens to be this daily structure over here, and that's coming in at a high of 26,440. So tried to pop up above there and reclaim that area. If it does on a close, then I'd be favoring a move further up. So let's go ahead and get into this here, and then we'll break down the lower term timeframes a bit more. But in this case, we see that Bitcoin is trading back above the weekly. It's also trading above the basis band of the Bollinger Bands here, which is at $26,061. And it has it's swung this high now a few times, and that high is coming in at that 26,460. And if it does push above here, I'd be looking right to that upper first standard deviation again around 26.6 to this weekly overhead at 26,750. If it can reclaim that, I would raise my targets to the upper second here around 27K to the monthly overhead at 27.2. And I would be looking for any price action above that hits this daily around 27.5 or so to turn into a wick. If it does close above the upper second, and especially above that daily at 27.5 though, I would I would be looking for expansion up to the weekly overhead there at 28K at first, and then the 28 426 area at that daily that was holding price up in the range above. And then if it did reclaim that area, then we're starting to look into the $29,000 low over here to 29,425, 30K, and then the weekly overhead at around 30,300 up here. So that was holding price down prior to the large move down. So that would be the upside scenario. For downside, if Bitcoin loses this $26,000 area again, keep an eye on today's open and the wick low. So the open is coming in at 25,840 and the wick low is coming in at 25,763. If we did see a closure below there, that would be another lower high. I would favor a move right back to that lower first, around 25.5. And if it did break down below there, I'd be looking right back to the lows here in this daily support zone around that 25.1 to 24.8. You could take the prior wick low over here, 24.750. I'd be looking for a move right back in there. And if we did see any closures below there and the lower second standard deviation, which is sitting right around $25,000, I would be looking for expansion down to, at minimum, this next weekly at 24.3 to 24.5. That would open up targets over time to the weekly below it at 23.7 at 24K. And the line in the sand, of course, as I've been saying for quite some time, is this monthly at 23.3. Below there, the bulls are giving up a lot. This is going to be a much longer form consolidation and probably a retest of the major low around the $15,000 to $18,000 region. But for right now, Bitcoin trying to show some strength in the lower term timeframes and see if that can bleed into the higher term timeframes. Now, I will say, let's go ahead and get rid of some of these other arrows here. We don't need those for the lower term timeframe volume-based swing fail areas. But right now, what is holding price down? Well, we can see that there's all this prior resistance as we marked all of the move down on the way down, and on the way back up, it's going to act as resistance, right? So we do have some higher volume. So we've got some high volume came in on the lows here that set the lows. We saw this higher volume breakout, and it stopped right at that 25.8 to around that 25.9 region here. And this was a higher volume, a historical high volume continuation area that was also found as resistance prior in this consolidation over here before the drop down. So logical stopping area, came down, found some support here on some other wick high volume areas that we had marked prior. And this was a pretty high volume area. So when it was broken through, we saw the next high volume candle come in on that move up to the high here. And you can see that this is a bit of a swing fail deviation area as it stands right now. Let's go ahead and turn on this guy here. Because it is right around a previous high volume area, I don't need to mark it again. But I do want to call out that, this is providing some decent resistance, and this higher volume area right here before the next move up is providing decent support. So we're trapped between this support and this overhead resistance here. And that's roughly it, you can call it 26,350, 26,4. Now we did just see that Bitcoin did attempt to break above there and go test up around 26,460, 450 area around the wick high over here, which was also another higher volume candle on the way up. I don't need to mark these as the move is moving up until we are clear of resistance and start to retrace. Then I mark the highs, because on a move up, you mark the higher volume areas on the way up, as they should act as support on the way down. And when you do fall through, you fall through level by level. And in this case, we're going the opposite way. This is mean reversion from a move down, mean reverting back up. So we don't necessarily need to mark all these highs, but I do put a teal trend line there. You can alert it if you want, so you know when price is passing it. And in this case, this was a swing of this area and then a move back down to this base of support. If it does move down further, I'd be looking for it to run around that $26,000 area, and that's where you got to be aware of today's low. And that's going to be coming in. Today is the 13th, so that's yesterday's. Nope. So that's going to be right around here. We're going to get there. Yeah, I guess it is that guy right there, huh? 13th, which 15-minute candle are you going to be on this wick low? Almost there. It's going to be this guy right here. So basically 25,866. It loses this area, likely to step it down. So it's this low right here. And it's right in a support zone. And that would be putting in a high on the daily. So let's go ahead and we've been talking about the volume-based swing fail stuff for a long time now. It works wonderfully for gauging swing failures. And this, by the way, would be a big swing fail area. So if it did lose this, we're looking to at least come down to the mid $25,000 region in here. If it loses this last low over here at around 25,600, then it's going to head down and probably retest the current lows, and maybe push lower. I'm not too confident in that though at this point. Let's go ahead and clean this chart up a little bit and take a look at daily momentum and see if there's some divergences populating here, and look at closures. We got a few closures to follow up on. So, and in this case, let's go ahead and throw the Bollinger Bands on while we do this, and we'll take volume off. All right, so being above the basis, and especially closing above the basis, I would be favoring a move to that upper first, and this should be white, so it's easier to see. And that upper first is roughly at 26.6. Still need to get above that weekly at 26.750. You could also, if you're using wicks here, you could take 26.800, these two wicks over here. And above there, I'd be targeting the upper second, which is right around 27K, and that monthly, like I said, at 27,200. Upper third is right there, just above that daily resistance at 27.5. So we have our upside targets. Downside targets are pretty clear. If we start closing below the last low and lose the lower second, we're looking for expansion to the downside on very low BBWP right now. And that is a 9/30 read. And we can see that there is bullish divergence here. It's not calling this a low, but this is confirmed bullish divergence, regular bullish divergence. And we already saw a run to the scale midline here at 26,446. So getting above there and this last spike high, well, if it did get above the last spike high, I will tell you it needs to get above both of these last lower highs here. And the reason why is because even though it's got bullish divergence, that's not populating on this particular indicator because it's not calling this low out over here. But there is bullish divergence there, but we'd end up with bearish divergence right there on the other side. But I do want to note that past the scale midline here, we do see that the bullish control zone is right around $28,000, and that was the weekly. And that's really only going to happen if we see, price action start trading above 27.5 and especially daily closures above there. Then we can start targeting that bullish control zone on the daily, which would be that, that big weekly breakdown at 28K. That was the one that kind of sent price tumbling. Lower term timeframes, it was the daily at 27.5 that didn't hold up after a short term bounce, but it's really that 28K weekly that really dictated the move down and and then getting rejected right there on this bigger high here within this range. And that's got to be reclaimed for Bitcoin to keep marching on. And the wick high there is 28, you can call it 28,185 to 28.2. That really does need to be recovered for Bitcoin to go retest the lows. And once we see a reclaim of this spike high at around 30,222, which is right by a weekly, there's a weekly close open structure at 30,300. above there, it's game on, mid $30,000 and higher, I think. Um, and I know that might sound aggressive for, the outlook on the macro timeframes for traditional markets and the media narratives and the selling and all this and that. It doesn't matter. That's the way the price action operates. That's the way the order books and order flow operates anyway. If you're going to take a deeper dive, just like if this wick low is lost at 24.9, we're going to go see this prior low at 24.750. And if it breaks, it's going to go lower to some of our much deeper targets. And, the momentum pivot is, going to be an interesting one here, because on the daily, we do see that momentum is turned to the upside on any closures above 25,470 now. So that is a pretty good indication that if Bitcoin does close above the basis band, at least today, I would be favoring another move or spike up to around that upper first, upper second area into that, the deeper $26,000 area, $27,000 area minimum. If we do see a nice close above the basis, I could be completely wrong. It could just put in a lower high, but we already talked about the criteria for setting another lower high. The 2-day looking okay. It's going to close with today's candle. Any closures above 25,400, and we are likely to see this complete across. It may not. It's crossed right now tentatively. We'll have to double check this. And in fact, this is a free Stoke momentum indicator called the BA reverse Stoke panel, and it has a really nice momentum pivot readout there. But there is a paid indicator that I often use, and this is KVDB's advanced Stoke from app.crowntrading.net. If you ever pick it up, I have any affiliation with them. I just really like the developers over there that Crown gets. And in this case, we can see that it has a projection, whereas the other one has a pivot. This has extra bells and whistles. And the projection is showing that, it would just be an initial cross up later today. So we would need to see the next 2-day closure for confirmation, basically. And in this case, let's go ahead and go back to the BA reverse Stoke here, as this is freely available in the indicators tab. So we'll go with this one. The 3-day did just open, and back above. Oh, we should probably look at the bands here. So if this closes today above the lower first, I'm favoring a move to the basis, and that is at $27,000. So that will update. It's probably going to be 26.8 to 27K. So that's basically the same areas that we've been talking about. And that above there, I'd be looking for a move back to, 27,300 to 500 here at the highs. And then the spike high again around that weekly at 28K. If we do see a move above there, I'm looking at the upper first, and that's coming in at 28, 4 to 6 right there at 28.5 in this case at the upper first on the 2-day here. So that is the next big areas to the upside. Of course, the downside, where is the lower second? We lose the lows. Lower second on the 2-day is sitting at 24K. So that's your 23.7 to 24K weekly. That would be a breakdown below the 24.3 weekly though, which I would expect a reaction out of that level. And then things work their way down a little after. So you can see here that the 2-day also has a bullish divergence. Needs to confirm that later today. The 3-day is looking at populating a drive of bullish divergence as well. Now, this is a continuation drive, and it is crossing currently, if it can close like this in the next 3-day closure, which will be coming in on Saturday. Or no, it will close on Friday's candle. So the rest of today, Thursday, it'll close Friday. So we will follow up with this and where price is in relation to it on Friday, but I won't be streaming when it's already closed. That will happen, an update with the Saturday open. But in this case, we can see bullish divergence is populating. The momentum pivot is, now come down substantially here. It is at 25,680. So you do want to see price closing above there to get a momentum turn along with a potential bullish divergence on the 3-day, and a close above the lower first is very favorable in this case. It's not really, it's not out of the woods until we see closures at minimum above 26, basically where it's trading at 26,100. And then it's got to clear those wick highs at 26.5 or so. Basis band is up there at 27,687, and the lower second pretty far down there at 24,200 on the 3-day here. So lows are lost. That's probably the destination, as the areas that I talked about in the beginning of the video when looking at the chart over here. This is the Bitcoin in 60 seconds chart that I do my shorts videos with. Now, the 4-day is another interesting one. The 4-day is closing today with today's 2-day. So we got a 2-day, 4-day closure, and closures above 25,667. So basically 25.7 or so. Above there, this will likely confirm this cross. It's already got a tentative cross up now, but will likely confirm that. Still need to see Bitcoin recover above the lower first. Again, it's all coming in around the same areas. This is 26.6. That's the lower first, rather, on the, is it the lower first? No, I'm sorry. It is the upper first on the daily. So upper first on the daily is 26.6 or so. It's a little under there, to be fair. And the lower first on the 4-day is right there as well. So to be honest, this is looking much like what I had described. A move down to the lower second. In some cases, we saw, an impulse through the lower second and third, comes back, retests the basis, comes down. I usually like to see a test into the lower second again. But we got this on the daily, basically. Come down, impulse through, get a little bit of contraction, test the lower second. Now you want to see it test the other side. If it can close above, you're looking at expansion that'll bleed on into the higher term timeframes. In this case, if we do see a recovery of the lower first, looking to the basis band, again, at that daily overhead resistance at 28,500. That's by that would be expansion on the daily into that weekly and daily overhead resistance of the breakdown above. So that is a pretty key area to see that basis actually get taken out if we do see that lower first criteria met, being a close above on the 4-day. And of course, lower second would be looking at just more downside below the wick lows, as it is currently at 24,663. So closing below there would be dropping the wick low over here, and I'd be looking for expansive price action down to the areas that we were just speaking of. 5-day did just open even, and we see that the lower first is holding things down still, just like the 4-day. That's at 26,200, so recovery above there. Again, we're targeting all the same areas. Basis band is at around 28.2, which is right around the wick high. In fact, it is it's basically dead on it right now. Lower second here is coming in at 24,200, 300 area, which is right on a weekly anyway, and it's also a 5-day over here. So you can see the 5-day closing highs over here, lining up with that 2-day candle as well. We do see that there is potential, if Bitcoin can close the next 5-day above 26,200, that we'd get an initial cross back to the upside. We would then still need to see the subsequent 5-day closure to confirm that cross on a regular stoke in this case. So, looks pretty good. And I think that's all the higher term timeframes that we can follow up on that are relevant right now. The weekly I'll cover with you guys on Friday. It is the lower seconds right in those weeklies that we've been talking about in terms of support to the downside here. There's a weekly right below it at that 24.3, and we see the weekly next to it right there, 24.3. Sorry, 24,316 and 24,278. So split the difference, and you got 24.3, and that's where the lower second is. I would be looking for a decent bounce from that area. if we do see the 24,750 wick low lost. Still not fully over this this cold cough thing. Sorry about that. All right. Now let's go ahead and dig a little bit into this FTX stuff, because a lot of the news articles that are going around about it, and a lot of the Twitter conversation about it is, well, quite frankly, just not accurate. It's being hyperbolic for clicks. Even if they did read over the documentation, they're not counting on you reading over that documentation. So it's a little bit of FUD, if you were to ask me. All right, so this is their appeal to basically be able to sell digital assets on the balance sheet of what they have recovered. And in this case, you know, there's a lot going on here. It's not worth getting into a lot of it, because a lot of it is just legalese and outlining the sections. So we can see the preliminary statement is there's a substantial amount of debtors' assets that include, among other things, coins, tokens, or other digital assets. Digital asset markets are characterized by extreme and unpredictable price movements. Volatility exposes these digital assets to downward price swings, basically. And it goes on and on and on, just kind of explaining what's going on with to this point, and a little bit of definition about basically setting up their case for why they want to offload some of this stuff. They give a little background about where they are. Then there's the jurisdiction stuff, and then we get to asset monetization. So they're outlining their asset monetization proposal for approval by the court. And in this case, I think I have. Do I have a highlighter tool on this? I might, or I might not. I don't know. We'll go over here. This might act as a highlighter tool. I don't know if that even shows up because it's in white. So we'll do this. So you can see my cursor. And you can see the debtor's purpose is to utilize the digital assets to preserve value for the debtor's estates in three ways. Monetize them in pursuant to certain guidelines after deeming in reasonable exercise their business judgment. The sales pursuant to such guidelines in the interest of their estate, blah, 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 blah. So this is the important. So investment advisor sales. So they have basically they're going to use an asset manager to not just sell, but also invest. And in this case, they want to generate yield through call overwriting and derivatives trading, and hedging against potential downside exposure through certain hedging arrangements. What are their hedging arrangements? Staking in certain digital assets to earn passive yield. That's their staking method. And the management and monetization program will exclude, pursuant to the management monetization guidelines, it'll exclude certain things, and then it goes through the exclusions. And in this case, in digital asset markets, similar markets, any information that becomes publicly available is rapidly incorporated into the market prices. So this is basically saying we're aware that if they know we're going to sell, they're probably going to front run us. So thus, the debtors, if the debtors publicly announce any proposed digital asset sales in advance, sophisticated market participants would use such information to their benefit and necessarily to the debtors and ultimately their creditors' detriment. So this is a key fact, because this was found to be, the judge agreed or concurred. Basically, what they're setting up here is the idea that we need to have a digital asset manager that is not going through the traditional channels. And they've outlined just above that they want to have the ability to monetize through call overwriting and derivatives trading. So call overwriting is your options. It's your call options, and you can buy or sell call options, by the way. and that allows you to hedge in either direction. You can also buy and sell put options, and they're not just calling out the call option side of things. When you describe this in court, if you want to be able to, if you're doing some sort of financial business, you're going to call it call overriding, which is your calls and puts. And where are you going to do calls and puts that are approved by the SEC? You do it with CME. So they want to be able to utilize things. What are they going to utilize? Well, what's listed on CME futures? We have Bitcoin CME futures, and we have ETH CME futures. So there are other CME futures coins, but the big bags that they have of those, Solana's the biggest, but it's really Bitcoin and then ETH. And so you can see the setup here. I'm not going to get too much further into this. Now, in this same document, they provide exhibits. And one of the exhibits here is basically a declaration. He's the global head asset manager of Digital Galaxy Capital. This is Stephen Kurz. If you're not familiar with him, you've probably seen some of his stuff on Twitter or references to him. He is duly authorized to make the the declaration on because Kroll is working with Galaxy Digital, Galaxy Asset Management. They also assisted in the recovery of assets. So in this case, he's saying he's authorized to make this assessment. And this is the motion for entry of an order of authorizing and approving guidelines for the sale of certain digital assets. So this is basically a pretty key thing here. He's talking about the exceptions, and he's basically setting up his statement. He understands that the debtors and advisors may have developed a management and monetization program and monetization management and monetization guidelines approved for, among other things, hedging and staking of digital asset through an investment advisor. Cryptocurrency markets have historically been very volatile markets. And then it basically just reinforcing what was already put forward to the court. And then even if the debtors did not publicly announce their proposed digital asset sales in advance, I believe that if they were to directly request quotes from and execute sales with over-the-counter market makers, they would tip off the broader market. So what does this mean? They still have to go OTC. Now, over the counter, he said he's basically saying that sales with they would tip off that if they were to use this. Basically, what he's saying, if the debtors, in this case, this is where everybody's getting mixed up, because they read this sign and they're saying, no, see, they can't use OTC. That's not true. That's not what he's saying. What he is saying is, I believe, because he would be the approved, or they, Galaxy Digital Holdings, or Galaxy, because there's two versions of it, Galaxy Asset Management. In this case, what he is saying here is that I believe if they were to directly request quotes from and execute sales with over-the-counter market makers, they would tip off the broader market and move the market price of digital assets against their interest. This is known as information leakage. An investment advisor has a strategic expertise in conducting sales while minimizing such information leakage. Okay, so basically what he's doing is he's saying they're not going to go on to Binance and sell this stuff. They have to go OTC. All right. If they go OTC direct, everyone's going to know who's selling. But if they use an investment advisor to do these things, they can make arrangements that then will allow us to not have an impact on the market, and that would detriment, in this case, the interests of the debtor. And in this case, it goes on to just reinforce this. An investment advisor also has experience in trading and trading infrastructure that allow them to make sales and choosing trading venues and counterparties for its clients in a way that is intended to maximize the value of digital assets. I understand that the investment advisor would be prohibited from executing transactions and taking any other actions that are not in the best interest of the debtors. This is all legalese because they're the investment advisor has to be SEC approved. So basically, they have to follow the guidelines, or they're going to get in trouble. You start moving the market, microscope is on you. So there's what I'm trying to say with this is there's no way that they're not going to go OTC. They have to. They have no choice. They're not just going to go and log into Binance and and Coinbase and just start dumping. Now, Coinbase has an OTC desk. They would have to go through OTC. In fact, this was already laid out in much earlier documentation, and this is not the earlier documentation. This is some of the most recent stuff, but I think you get what I'm saying here. What is really important about what's going to happen is they have to do OTC. They have no other choice. They're not going to, go degen trading on crypto exchanges, which, maybe they can go degen trading, long, short, and options on CME. That would still be in this case, it would not be them directly. If they're going to hedge, they're going to get options through CME, and they're going to have to go OTC. And look, there are other options platforms, but is OKX an SEC approved options platform? No. So they have to go the futures route. And that's what they've already outlined in their documentation. So this is going to be really something that a lot of people in the crypto space will take advantage of as a news driven narrative to shake people. And it really is going to have very little impact. Now, I will say that Solana, on the other hand, because of the amount, if they're going to move it, they probably want to wait for this to recover before they start moving it. It does not benefit, just so everyone understands this, it does not benefit the debtors to dump the market out. In fact, that's actually violating some of the fiduciary responsibility that they've taken on. So they have to do things in an orderly manner that has minimal impact on the market via them. So I hope that's very clear. I know that you guys over in the other chat, you guys already know this stuff. You work in the industry, not directly with crypto and OTC stuff yourselves, but this is very bog standard stuff that a lot of people in both the financial industry and sector, a lot of journalists and a lot of regular pundits in the media, your CNBCs, your Forbes columnists, and like all these other people, they have no clue what they're talking about, and they also have an agenda. So and in crypto, even less so. I mean, most people in crypto barely know anything about how financial operations and trading firms are actually run. And when they do find out how they're run, in a lot of cases, they misidentify what's legal, what's not. And there are a few good people that do understand these things. And then there's a lot that just don't. And they just take advantage of the move, especially of the news for a move in price action. So I hope that kind of clears things up. And let's jump into traditional markets and take a look at what's going on. Now, we do have options expirations going on this Friday. Now, this is another thing. I'm a big fan of a few other personalities in the crypto space that are from traditional markets. Now, one of them is Crown, and he has brought up a few times that there's the witching going on. It's quad witching, I believe now. It's not triple. It should be quad. It's the end of the year. It's last quarter. So rolling at the last quarter and preparing for the next, quarter to come and end of year into next year. So there's a lot of things to consider. What I will tell you is that, look, in a lot of cases, by Friday expiration, there's very few people holding till expiration. They're rolling their positions throughout the week. And then rolling, into new positions through this week and into next week. So realistically, we start seeing the actual outlook of traditional markets on Monday. And in many cases, you're seeing, bouncing around a price throughout the day today. It's going up, it's going down. It's been all kind of all over the place today. And that is, a lot of positions rolling for options, trying to get the most for your positions as you roll into new expos. So, or new expirations. And in this case, Dow, I did mention this. You don't want to see, oh, look, there's a trend line there now. I'm turning into a moon boy. Now, look, the move that I had mentioned is, a lower high here. I'd mentioned this on Monday. You don't want to see a lower high here because this, if it does come back and take out this low, you just got you've had your higher low and you're getting another lower high. It's easier to go run that low. So in this case, it's still going to be fine. It could chop around, just go sideways until we see resolution, probably either later this week or next week. And in this case, closing below the basis band, I'm targeting, another move down to around 34,450 or so. Man. All right. And then somewhere around this low, if that area is lost, around 34,350. If it loses the wick low at around 34,3, then we're looking for it to run, a little bit further down, 34,250, and then 34,1. 34.2, 34.1, and 34K, and slightly under. If it loses 34K, it's going to leg down somewhere around the next lows in the upper 33 to mid $33,000 area. So somewhere around these two lows down here. If it can just go sideways, it can dip in and out of this area and reclaim that basis at 35 or 34,564 right now, and push that upper first at 34,750 or so, and take out that high at 34,850. I'd be looking for it to run the upper second at 34,950 to somewhere around the highs here at 35,000 to just a smidge over 35,000. So now momentum is turned against it currently. Momentum pivot's going to be 34,500. It's not too far away. It is actually going to cross back up today on a close above 34,500. That's an interesting setup there. A little bit of flip-flopping on the Stochk momentum. So 34,500, if it closes like this today in the next 40 minutes or so, then I would still be maintaining the same criteria that I just showed you. With NASDAQ, same thing. Like I said, just be aware of lower high. And we did already see this lower high put in on this last candle. We did see a move back up to fill, to hit basically the bottom side of the high here, or the open, I should say, at 15,400. And it's just doing the same thing. If it takes out the low here by the basis, especially loses that basis at 15,170, takes out the wick low at 15,140, then I would be looking for it to move somewhere around these opens at 15,000 to this close at 14,941. If it does lose the 14,900 area, we're looking for this to run the lows again around 14,800, 14,700 region. If it loses that, beware of the 14,600 low over here. If it can recover above the upper first at 15,441, 450 area, I would be targeting the high again around 15,500. Above there, I'm looking for it to run the next high at 15,600 to the upper second at 15,700. So nothing really too crazy here. Stochk is turned down against price action right now, 15,450, and it's currently trading at 15,322. So, and was I reading the Dow one right? Something doesn't feel right at there. 34,520. No, it's right. I was reading it right, just making sure. SPY, same thing. High was already set. We see that it did try to move back up. Looking at if it closes below 445 here, the yesterday's wick low, then I would be looking for it to step down to around 444 and the basis, where the basis is coming in rather. If it loses that, be aware of the wick low at 442.75 in this case. I would be targeting the opens just below it there at 442 even, down to 440, and the lower first at 439 or so. If it loses 439, we're looking right back into, the mid 430 region, down to around 434 at that lower second. And if it loses that and this last low over here at 433, it still needs to hold up at that 430 to 432 area. If it does recover above the upper first here at 448, 449 or so, it's got to beat out this gap fill area, which it did not actually test at 449. If it can get above there and the upper first, of course, on a close, I would favor a move up to around 450 to 452. And above there, of course, we're looking at, 452 to 453 by the upper second up here. Above there, we're looking at 455, 460. So, again, 447, trading at 445, going to be pressured down coming into tomorrow. But not too much else to really say here. It's chopping around in a, support resistance zone. Same for, NASDAQ is technically above its support resistance area. Is the structure ugly? Is it like, okay, this is distribution? Look, it's only distribution if we see this low taken out at on NASDAQ at 14,557. If we do see that area taken out, this would be your lower high distribution structure. So just be aware of that. Early indications that we're going to go test around that area. For the bulls, they want to see it tested around support in a higher low fashion, but early indication would be closures below the basis, and of course the lower first, and then it's eyes on that low for possible distribution. I realistically, I would be looking for distribution not too far away. It would be brutal for the market and market participants, but in terms of structural, this thing could distribute all the way back to this high at 13,555, and it's still fine. Everyone will scream and cry and new Great Depression and all kinds of stuff, and still it would still be looking fine for a longer term. But if it did, of course, pass that area, then take out this last low at 11,726, then it's over. Then we're looking for new lows. But for right now, it looks okay. NASDAQ is in a little bit more of a precarious position. This also does not look the same as, Dow does not look the same as NASDAQ. So is what I'm trying to say there. NASDAQ and SPY, also not the same look, but NASDAQ would be the uglier one of all of these. If you were to pick an ugly chart, this would be the ugly one if it were to break down from that low. And then, obviously SPY and Dow are probably dropping as well. Now let's go look at Dixie, because Dixie is going to be big to pay attention to here in the coming weeks. Now you'll notice that I do have an extra line here because we saw the high put in, right? We talked about this. Well, where did it put in a high? It put in a high right at this major low over here at around 105.09. Now this had already previously acted as resistance, got closed above and then down. We saw a swing of it and then straight up rejection back here, and then rejecting lower. And then right now, typical pullback SR play at that low. And in this case, lost the 104.69, nice, and the upper first. So we had an evening star to a morning star reversal setup here. Now the evening star actually did put in a high here and the Morningstar setup here, if it was to put in a low, would be at 104.91. So back above there in a close, and I would be favoring a move back to 105.09 and the upper second at 105.30 into this this area up here, and the deeper 105, possibly even 106 area at that resistance overhead, which is just this higher high over here. If it does lose 104.42, I would still be looking down here to 104.27 to about 104 even. If it does lose that and the basis band, I'm looking for a move back to 103.50 area by the lower first and the support area. Below there, I'm looking for it to run this low again at around 103. If it loses that low, we're looking probably at expansion by the time it would get there. It would likely be a bounce, either an initial bounce off the lower second. If it lost, it'd be an impulse, or an expansion down probably to 102 if 103 is lost. But right now, it's still hanging out on the highs here. Not too much interesting. As I had said in the last stream, I like to see multiple drives of in trend bullish or bearish divergence rather. For reversal setup, we only saw one drive of bearish divergence. I want to see more. I want to see at least two. And then I also want to see it start to populate that on some higher term time frames as well. 2-day should have it. No, 2-day doesn't even have it. So it's fine for right now. Want to see multiple drives of bearish divergence on that daily that then bleed into the 2-day. Momentum is, still down on the daily below basically 105. It's 104.98. The 2-day is pointed up though above 104.40. That is not closing today. And it's still trading above there. So there's a chance that it could turn momentum down. It would only be an initial cross down on the 2-day. 3-day is not yet crossed down. 3 days at 104.61. It is below there, and that will, or no, I'm sorry, it's above there, and that's going to close today. It's basically the momentum pivot is right on top of it right now. I do think it's getting close, but it's just a matter of how much further is it going to push up before it actually puts in a bit of a longer term high here. It could go for, the rest of the month, to be quite honest. If you're looking at the 3-day, the 5-day still up above 102.83, which should be the weekly. Yep. So 4-day is a little bit closer at 103.68, but still a buck away. 3 days right there, probably going to be right on top of price on this closure here. But 2-day looks fine so far, and the daily still gotta build some more bearish divs and or just nuke, one of the two. And in this case, it looks fine for further upside. There's probably going to be pushback on that, but it could vary. It's still in the realm. Let me put it this way: still in the realm where it can push this high and higher, but it's getting very close. If it does lose that 104.40 area, 104.45 area, then I would be looking for a move back down. And if it doesn't bounce aggressively and starts to fall through like around 103, that's where it's like, okay, we don't need to see more divergences. It's probably going to bounce into lower highs at this point. And we're probably looking at a bit of a reversal setup for, at least the short terms that can lead into those longer term timeframes. Now, gold has pulled back quite a bit. It lost the low, and it's running right to the areas we talked about. So, as it stands right now, we had talked about in and around this wick low at, 1903. We got to 1905. If it does lose that wick low, the lower first is going to be right there, I believe, after today's closure. That's at 1901. I do think it's going to be around 1903 to, it's going to be around 1903, I suspect. And if that area is lost, then I'd be looking for a run back down to this 1893 to around the actual lows by the lower second at 1885. If it loses that, then we're looking for much lower. But for right now, that's where we're at. If it does hold on to yesterday's wick low, it could potentially set up for a swing fail into a higher low versus this low back here. Technically, it would still be a higher low based on this wick if you're taking this wick as a wick low. We got a high to higher low to a higher high. This would be, if you're doing that though, this would be a lower high. So in this case, as long as it's above here at around 1907.68, it does have the chance to swing, fail to the downside. Of course, it would be a failure to swing down further. Swings this area and then reverses. If it can take out today's 1915 area and recover above this low where the basis, it's actually got to recover above that basis, 1917, 1918 region, then I'd be looking for it to trade up around 1920, 1925 and possibly give 1930 a test if we see any strength. Now, from the daily, it's still pretty heavily downside angled below that 1930 on the momentum pivot. 2-day is now starting to turn at 1920, below 1922. Now, it's still got some time to recover above there. 3-day is still pointed to the upside at 1905, which was just spiked. That is also the lower first on the 3-day. 4-day, we're looking at 1895 at close in the next, with the next 2-day candle. If it can close above 1895, it might shift, but if those other lower time frames are turned against it, doesn't mean much. 5-day gonna close on Friday with the weekly here, and that's going to be the same pivot at 1902. So gold is right around its momentum pivots, and to be fair, the weekly, if it does turn, it's in an area where, from the weekly perspective, all it's got to do to break trend is put in a higher low than this last low at 1884 and take out that 1952 wick high, and we've got a trend break. In this case, this is a weekly downtrend, and can't fight the trend until the end of the trend. As I had said before, the trend is your friend until the end of the trend. And what everybody leaves out is when the trend is unclear, you're in fear. Or when the trend is unclear, everyone's in fear. In this case, the trend is very clear. And it is a downtrend on the weekly, but it is right in an interesting area where if it could pull off a trend reversal, it's possibly getting close to doing so, especially if we start to see closures stack here. The big thing to call out that would be counter to that point is this regular bearish divergence that's populating on the weekly. So to avoid that, bulls need to, at minimum, regain around 1918 and 1920. Otherwise, that bullish div is targeting this last low, down to possibly that lower second standard deviation at 1880. So be aware of that if you are trading gold. Yeah, I mean, lower term time frames, 12 hour could pop up. 1911 would do it right now. When this opens back up, it's likely to be very close to its momentum pivot. You'll see that it likes to ride the upper and lower second standard deviations. If it's going to set up a reversal, again, it's coming in at lower first at 1915. So it is possible. And it's just a matter of seeing where things fall by Friday's, coming into Friday's closure. And then we'll likely see follow through next week in whatever direction is chosen. Maybe a little bit of choppiness early in the week, and then go from there. I mean, even the 4 hours probably beat up, and throw in bull divs. Yeah, it's possible it could even get another one here. It's pretty beat up, but it wouldn't take much for this to pop up and meet some of the upside criteria and maybe avoid some of the bigger downside possible confirmations for further downside. But as it stands right now, this is a this is a head and shoulders pattern that you're staring at on the 4 hour. So, and to be fair, it's already broken down and the target is the lows. So yeah, there's that if you're a pattern trader. Let's go ahead and I'm going to go over here and see if there's any questions. And we'll see if there's any questions in YouTube today first here. Is there any questions from you guys there in YouTube or requests? I do have a little bit of time. I can take some requests. Let's go ahead and get rid of bands, and let's throw on our volume-based swing fails and continuation areas here. Uh-oh. I got another meme pattern. You know what's going to happen, guys? I'm just going to turn into a pattern trader. You know what? No more volatility trading. No more volume, understanding volume and volume swing fails and volume continuation areas. We're going to go just straight patterns. So we've got our ascending triangle, which obviously means that it's not going to build any bearish divergence here and fall right back in after a deviation. Oh wait, it did, and it deviated. So it doesn't mean that it wouldn't play out like a pattern or like that particular pattern, but it's fairly low hit rate. If you guys over in YouTube, there's a lot of you in there. I see that like one number is different for concurrent users than the other one, but it looks like there's quite a few of you in there. If you have any questions, comments, or requests, let me know. And while I'm waiting for you guys to catch up, we'll kick the music back on here, and to kind of while I step away from the microphone and cough real quick. Let's get that going. Okay. All right. Not seeing any questions come in over on YouTube, but I do have some questions over here. You want me to pull up the core talks again? Yeah, sure, I could do that. Which one? There's the longer 20. This is from the 23rd. This was the big one that everybody was looking at and like pulling all their articles from. Then most of the articles are most of the articles, yeah. So I'm sorry, I'm reading. Most of the articles are going to be on this other one from the 7th, and then you're going to see articles from today's filings, which are going to be the 13th, if that's what you're asking. There's a bunch of them. So there's the hearing regarding the sale motion. It's granted. And then there's the related attachments. So you do have to remember, if you're going to go and look this up, typically, you're going to go through Pacer or something like that, but they are required to post this publicly. So after the filings are up, then you can look at the PDFs, and you can make sure to look at the related attachments to each motion. So this is their minute entries today. Motion granted. So this would be today's. Is that what you were asking about? So yeah. No, this is just their sign-in sheet. I don't care about that. That's their minute entry. Duh. I read it and I still clicked on it. Order authorizing. Let's see. Is this the signed order? Are you asking, would they have changed anything from the original? No. I mean, it's the debtors are the ones that are the ones that submit the plan, and the court is going to approve it. The court can tell them like, hey, submit another filing to modify this section of your proposal, and then they can do that, and they have done that. But not much has changed since that 13th. It's a lot of busy work, but this would be the order granting, or the motion granting the order. So yeah, so you know, no indemnification provisions contained within the service agreement are as follows. And this is all Chapter 11 stuff. So, to the extent there are no conflicts, then calendar 15 days of termination of the investment agreement services effective date for the Chapter 11. Yeah. This is all just legalese. This is all just granting their plan, basically. So you're going to see when you get in here, these sections in the investment services agreement pursuant to Section 363B of the Bankruptcy Code, which is you know, their Chapter 11, and basically saying that their plan to liquidate is their Chapter 11 bankruptcy plan. It's when you file for bankruptcy, you have to submit a plan for Chapter 11 like this for liquidation of assets. So this is all bog standard normal stuff, and I know there's a lot that are mincing that don't understand this stuff, that are mincing through the language like, oh my god, like with every little thing that's happening. It's like, man, no, it's painting a completely different picture than what's really going on, that kind of thing. Let me look over here. I do see what's up, JR? Hi, Roka. They're gonna lose everything again by trading it. Yeah, maybe. You never know. No, I mean, look, the asset managers that are gonna do options and stuff, and they're gonna, if they're gonna be hedging. So I'm, you know, they don't have to. They have say on what's sold and when and how much, up to the limits that they've described. And you know, there's plenty of articles about the limits that they described, but I suspect they're going to be hedging in options and working with OTC to offload probably the ones that they don't see with potential ETF filing approval on the horizon, if I had to guess. And yes, I know there's spot ETFs for ETH that are being filed right now. But, you know, it's not, they're behind. They have Bitcoin spot ETFs go through, the ETH ones are probably going to get approved as well. They're going to use the same model. And yes, there was more filings from other big financial firms the other day that are filing spot ETFs for Bitcoin and ETH. So that was a little less talked about than this FTX stuff. But I can always go over that as well at some point. If you do find it fitting topic, do you remember my question about the U.S. Treasury bonds? Like the dollar value on balance sheets should have gone down anyway over the last couple of years, months. So when people show charts of bonds values, they go lower and lower. Doesn't mean that the entity, nation, or institution is dumping bonds. In my mind, no, of course, bonds would be more telling than the value. Anyway, might be a bit off topic. Okay, so I don't remember your exact question, and I kind of think I understand what you're talking about, but look, bonds are rolled often and traded. So if you're looking at the bond market, and let's say we got the 2-year here. 2 years around 5%. Oh, nice spike. Right now, what we're seeing is there's some bond buying going on, which is forcing yields down. And then there's been selling pressure forcing yields up. But, you know, you can roll bonds. You don't have to hold them till maturity. You can even sell them and arbitrage the difference. So people showing the dollar value. You're talking about the value of the US dollar? Or the amount of value that China holds, or the amount of dollar value of they have locked up in US treasuries, you mean? Well, the U.S. Treasuries technically, you know, it depends on which treasuries they're holding, and I'm sure they've been rolling U.S. Treasuries onto their balance. You know, we're rolling onto their balance sheet on the prior run-ups to the highs, right? So if they have higher yield, you know, what they're doing is they're taking whatever amount of money is locked up in that whatever amount of money is locked up in their balance sheets for those bonds, they can then offload that, right? So when they offload those bonds, they're offloading them for liquidity, right? They're not going to hold them till maturity, and you know, you got to remember, like, they might have 30-year bonds, but that's not the majority of what they're holding. You know, they might have 30-year bonds from years ago, but they rolled that into short-term bonds, you know, a long while ago. Yeah, so I'm not really sure what you're asking there, but I see what you're saying. Basically, the easy way to think about bonds is the higher the yield, I mean, there's selling pressure. You're trying to attract investment, right? So the higher yield bonds are selling pressure for liquidity. And selling pressure is not redemption. Holding till redemption is selling pressure, yes, but it's not. That is not the redemption of the bond necessarily, because you can swap bonds, and that is going to provide selling and buying pressure as well. Now, of course, there's also the auctions for bonds, which is where you're seeing that selling pressure and buying pressure come from. So, but yeah, I guess I remember something that you had said about it prior, but the idea that the dollar amount that they're holding, look, the dollar amount they invested in the bonds in the first place is they're going to take the loss equal to, if they're underwater on the bond, they're going to take the loss equal to its current arbitrage trade value. You know, if it's a low yield bond, they're not going to get much for it. Who wants to buy it? So you just dump it on the market. Who wants to trade for that? And then, you know, if they've got a lot of bonds that they're selling, well, I mean, China's been selling bonds for liquidity this entire time, which is one of the reasons why bonds have been going up. Also, one of the reasons why dollar's been going up. And I know that's counter to what a lot of people are talking about. In the short term, that's one of the reasons why things were pumping up. So, but yeah, if there's any other questions, go ahead and ask, and I can follow up with you on your bond question as well at a different time. Okay, yeah, yeah, Jimmy, just let him know if he has those kinds of questions. Those are oh, you did let him know. Yeah, but those are going to be very FINRA focused questions, so this isn't really the venue for that. Are you working on your exams? He is? Okay. And you guys got a lot of people rolling through exams over there. Yeah, that's really like, that's in the weeds, probably a little bit more than I mean, because this stream, yeah. Okay, you told him. Cool. Yeah, I can always talk with you after. If it's FINRA focused stuff, I could talk to you after. Yeah, because I need to give you a real detailed answer on that one. Okay. Any other questions in like YouTube? If you guys have anything else or anything you'd like me to check on here. As Bitcoin, oh my God, 10-second candles dumping. Oh no, it's 26,160. Anyway, what did it just test again? 26,200? Yeah, it did. Yeah, that's gonna do it then for today. Yeah, I can follow up with you guys over there. For those that were asking about the Discord server, Still working on it. Hopefully I will have something that, yeah, there's still some screwiness with the bot that we're configuring for moderation. So I don't want to open it up and then have a bunch of issues with it right off the bat. I'd rather get it tested with some of you guys first, slowly get people in, then open it up. So I will hopefully follow up with you guys by next stream, which is Friday, and hopefully maybe have it launch over the weekend. We'll see. But that would be a public Discord, and free as always. So I think that's going to do it. If there's no more questions outside of the very hyper specific Series 57 exam questions over there. But yeah. All right, you guys have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. I will have a Bitcoin in 60 seconds video out later today, so go ahead and watch that. Likes and subs do help out on YouTube over there, so if you are so inclined and you do like this content, please go ahead and hit like and subscribe. And I would turn on the bell for notifications, because the shorts videos get buried pretty quick unless you go straight to the channel. And with all of that said, I will let you know that I appreciate you, and Landy out.
sempre continuare. Volatile.